So we would just like to start off with a brief introduction on Grip and Strata. Grip, as you guys know, is one of the leading platforms in the country, which is democratizing alternative investments for retail investors. In the past 2.5 years, approximately 2.5 years, we have enabled more than 400 crores of investments, out of which 130 crores have been processed as returns. We have 14,000 plus unique investors, with the average investments per user being approximately three. Users from more than 57 countries and 600 plus cities have been a part of the Grip journey. And we are very excited to be bringing more and more products, alternative investment products for you. Grip started its journey more than in the mid of 2020 with its first product, which was leasing. This was quickly followed by our inventory finance product. In the last year, Grip has brought three new products to the retail investors. These being primarily startup equity, which involves funding high growth early stage companies, revenue or subscription based financing, where we have partnered with the likes of Connect and Reco. And finally, the opportunity which we'll be discussing today, which is commercial real estate and warehouse investing. Here, we've partnered with Strata, who's acting as the originator, and the minimum investment size that is available on Grip platform for investing in these opportunities is INR 1 lakh. I'll just move on to the next slide. And on Strata and Prajwan, please, if you could take this.
Sure. Thanks, Aman. Thanks for the introduction. So I would start by giving a quick introduction about Strata, where we fit into the gamut of the real estate space, how we are democratizing the commercial real estate space and making it accessible for individual and retail investors to invest smaller ticket sizes, and wherein again a partner like Grip is further fractionalizing it and making it even more accessible to their investors. And also, I will post that I will touch base upon about the current opportunity. So today, CRE, the commercial real estate space, this was a space which was not actually accessible to many retail or individual investors. This was only accessible to high net worth individuals and institutions who could deploy more than 10, 15 crores of investment in a single property. So for us, one of the main reasons for us to choose commercial real estate as a asset class for to give it to individual investors or to democratize it was because today in India, a majority of the population, majority of the population would want to first secure their capital and then look at returns. So majority, if you look at the data, 70% of investors invest in safe instruments like gold, FDs, all these products. So we wanted to give an alternate asset class which gives that same stability, but gives a slightly better return than a gold or an FD. So the right asset class that we chose was commercial real estate, because this is an asset class which is very stable when compared to other asset classes. Even if you compare it to residential, it's quite stable. Since the Lehman Brothers crisis, the commercial real estate space has proven to be quite stable, and it has been given an average return of anything between 14 to 18%. Secondly, if you compare it to a residential real estate, the rental yield that you make here is anything between upwards of 7.5 to 9.5%, whereas the residential gives about 2 to 3% on the higher side. So hence, we thought this is an asset class which could give that stability to investors, and at the same time give a better yield and give that cash flow for investors who are looking at a regular income, a stable, fixed, regular income. So this is an asset class that is best suited for such investors. Also, at after a certain tenure, when he's exiting, he or she's exiting, he gets a capital appreciation component, which is also which is anything between 5 to 7% depending on the asset class. And further, in commercial real estate, what happens is you are not just fixated on investing in office spaces. Commercial real estate is further divided into industrial opportunities, warehousing, data centers, and office spaces, of course. So we at Strata, we've been offering all of these opportunities to investors in since Strata as a so today we are a a investment management company which gives access to investors to invest in grade A commercial real estate, where investors have an option to invest smaller ticket sizes. So hence giving an option for investors to invest in office spaces, warehousing, and industrial opportunities assets, which were previously not accessible to retail or HNI investors, whereby they could diversify their investments. So today, investors, they have an option through Strata to invest in multiple assets and diversifying their real estate risk, location-wise, tenant-wise, builder-wise. So we've started this journey since March 2019. Today we manage a AUM of 750 crores. We manage 2.8 million square feet of assets, varying across office and warehouses. Some of our the prominent tenants in the platform are we have Westside, Puma, one of the largest toy manufacturing companies, Microplastics, one of the promising home furnishing companies, Wakefit, another pharmaceutical giant from UK, Randolph, Union Bank of Switzerland, another newspaper publication company from the US, Reach Local, another logistics company called Stellar Value Chain. And in the recent past, we had some opportunities in Chennai where healthcare technology company called AGS Health and Dido, which is into conveyor belts and automotive components. So these are some of the prominent tenants who are on our platform, and we were able to have tie-ups with them.
Thanks, Prajwin. So in terms of sourcing the investment opportunities for our CRE product, we have entered into partnerships with leading commercial property fractionalization platforms like Strata. The role of Strata in these opportunities is to identify the commercial properties, manage the fit outs, finding the marquee tenants, many of whose names Prajwin just took, and looking at the overall leasing of the properties through the special purpose vehicles managed by Strata. The role of GRIP in these opportunities is actually to act as a technology partner of SEBI registered alternative investment funds. As many of you know, we have been at the forefront of ensuring that we can bring these opportunities to you in a SEBI regulated structure. And that is the role of GRIP, to act as a technology partner to one of these alternative investment funds. We do not have any role in the identification or management of the SPVs or of the underlying commercial properties. Moving ahead on the second section, which is why one should invest in commercial real estate. Prajwin, would you like to take this one?
Yeah. One of the reasons why we chose commercial real estate as an asset class for investors to invest is, like I said before, commercial real estate is one asset class which was not accessible for investors to invest. It was always available for institutions and larger HNIs who could deploy 15-20 crores. One. Second thing is that's an asset class which is very stable when compared to other asset class like equities, mutual funds, and other instruments, and even residential real estate. Since the Lehman Brothers crisis, they have given a very stable returns, and it's proven to be stable. So that's one reason why we chose commercial real estate. Stability is something that we want to give it to investors, because today majority of the investors in India, they look at asset classes which protects their capital first and then gives them the return. So we thought commercial real estate is a story that we could turn around, which has a self-stability component to it. And also, since we only deal with pre-tenanted properties or pre-leased properties that you say, we have tenants in place, which gives fixed rental incomes to investors month on month. So that gives them the visibility to see that yes, there is a fixed amount that's coming month on month. So investors who are looking out for cash flows, this is an ideal asset class. And we at Strata, we are democratizing it by giving investors an option to invest smaller ticket sizes. So this is the first few things. Second thing is, the second point, like I said, we only look at pre-leased assets. We don't look at any assets, any commercial assets which are vacant, which are not occupied by tenants. So we only look at assets which are occupied by grade A tenants, because that gives us the visibility that yes, there will be rentals coming month on month. So if I were to be offered a property in a tech park, a good grade A property, but there is no tenants, we don't look at that property. So, and we don't look at builders as tenant. We don't look at predominantly, we don't look at co-working spaces as tenant unless and until it's in a CBD. Then the third thing, like I said, the monthly cash flows, which is fixed in nature. So here in CRE, what happens is every year is the contract is for about 10 to 15 years, 10 to 15 years, depending on each asset. So monthly cash flows is something which we offer to investors, which means to say that because there is a specific graded tenant and all the contracts with the tenant are anything above 5 years to 10 years, in certain case 15 years, there is a definite tenant which has a long-term lease and a lock-in in the property, which means we'll have uninterrupted flow of rentals to our investors, which gives us a lot of stability. And the rental yields are also anything in the range of 8 and a half to 9.5, depending on the asset class. If it's a warehousing, the rental yields are anything above 8.5 to 9%. If it's an office space, it's upwards of 7.5 to 8.5. So the Indian warehousing space has been having a lot of traction even since pre-COVID time. Because of the entire advent of e-commerce, there's a lot of demand for warehousing in India. So and the demand for warehousing is set to increase at an exponential pace. Today, we have got the likes of even a builder like Hiranandani has set up a separate company called Greenbase, which is into acquiring of warehouses. And post-COVID, the entire offline to online transition from offline to online has become effortless, which generally large companies spend a lot of money. So, in fact, one of our first assets or one of our third assets was in the warehousing side right in the middle of the pandemic, which was in Hosur, where the tenant was a leading logistics company called Stellar Value Chain, which is owned by ex-CEO of Future Supply Chain Group. And we raised about 54 crores in 1.5 months. So there we saw a great demand on in the warehousing side, because today, even if someone were to buy a phone, which gets manufactured in, say, Chennai, and if it has to reach to someone, say, in Delhi, it goes through multiple warehouses. And if it has to travel to Delhi, the entire gap is fixed by all these logistics company, which means they have to have fleets of 150, 200 trucks, which goes to smaller warehouses, which gets transported to Bangalore, and from Bangalore it goes again to Bombay, and from there to all the the orders that has been placed. So yeah, so warehousing and logistics goes hand in hand. So there is a lot of demand during COVID. Some of the smaller retail outlets had been converted to warehouse because entire your purchase of your groceries and everything was done online, and for things to get delivered just the next day itself, which means to say they had to set up smaller warehouses closer to the main hubs, like say a prominent CBD or one of the some of the prominent residential areas in each of the cities. So that way we saw a great demand in warehouse, and we will be seeing an exponential growth in the warehousing side because initially warehouse was considered something like a go down where people just stored things, but today the entire shift from grade B to grade A warehouse is happening, and only 42% of the warehousing side is in the organized side, which means it's on the grade A side, the rest is grade B. So we've still got a lot of room to for amendment from a grade B to grade A warehouses. So yeah, so like you see, there's a majority of the warehousing side. The tenants that are occupying warehouses are, one is mainly the third party logistics company. Second is auto and ancillary, which measure a market like Chennai. You will see a lot of automotive component companies are occupying warehouses. E-commerce is predominantly Bangalore, and electronics also the same. So the rest of the portion is occupied by retail, FMCG, and others. Yeah. So the current Bangalore warehousing opportunity is a 2 lakh 18,000 square feet box, which is in Hoskote. Hoskote is one of the prominent locations, warehousing locations in Bangalore, which is which connects to the airport. Um, while the tenant, so here what the deal is, it's a 200-acre park with several grade A warehouses in the industrial unit. The entire industrial park will be spread across 4 phases. This particular box will be a part of phase one, which spreads across 2,18,562 square feet, which will be occupied by one of the largest logistics company, which has got presence all over India, and the parent company is a listed company in BSE, and it has got a market cap of 8 billion USD. And so the entire structure here, what would some of the clients for this particular tenant are Microsoft, Apple, Amazon. All of these prominent companies are their tenants, so they'll be storing goods of all these clients. Yeah, it's a part of a 200-acre park with several other warehouses in the vicinity. So you've got Flipkart's vicinity, Flipkart's facility, which is right opposite to this particular warehouse. So this is right on the main road. That is the Hoskote Narsapura main road, which connects to the airport, and also the upcoming satellite ring road. The satellite ring road, which is about close to about 10 kilometers away, and the Bangalore Chennai Express Highway, which is also close to about 15 kilometers away. Also, the airport is about 45 kilometers approximately away. So, why all of these things are important is because any shipment or any of these shipment that is coming from the airport, it point for all of these warehouse to have all of the goods stored there. Like some of the many of these facilities of like there are these facility of which assembles iPhones in India, and so all of that facilities are there. And you have Volvo's facility, Volvo's factory, which is there, and you have Scania's factory, which is there. So it's a prominent warehousing hub, which is the Hoskote, this particular hub. So the entire structure is a a pre-engineered, prefabricated structure. So what happens in a warehouse is you don't need to excavate the entire land. Unlike any other commercial development, what happens is you need to excavate the land and then build up the structure. So you don't need to do that. You just need to level the land. And in specific to this property, the land is leveled already, and the construction, the foundation work has already started in this case. Another reason is generally we don't look at an under constructed property, but unless and until if it's a built to suit asset that is based on the tenant's requirement, if the asset is getting built, we are comfortable, and that will only in a warehouse, because what happens is typically in a warehouse the entire structure will be built in a matter of 5 to 6 months. In this specific case, the structure will be ready in another 4 to 5 months. Because here, like I said, majority of the construction is pre-engineered, prefabricated, nut and bolt, so it just has to be erected. So that's that. So here we are expecting the entire warehouse to be ready by January end of next year. So, like I said, location-wise, Bengaluru is one of the fastest warehousing markets in India, with about 35% CAGR growth in transactions since 2017. And Hoskote in specific is known as a market which is witnessing highest number of transactions in warehousing. Here, the average rentals are anything between 18 to 23 rupees. So there's a great potential which is there, and this particular and this is a industry. This is going to be like a warehousing park or an industrial park, a 200-acre park. We had a similar story which we started in April of 2020 in Hosur, with the same builder, that is Avigna, where we started off with 2 lakh square feet, and today we owe it's a 25 25 lakh square feet park, which is there. That's about 120 acres. So the story that we have seen, how it transforms from a one single box to we own about 85% of that park, with multiple tenants like Wakefit, Microplastics. You have Stellar Value Chain as tenants. So all of these companies have occupied boxes of 2.5 lakh square feet, 3 lakh square feet boxes. So this is going to be a similar one which will be replicated here. So yeah, so we are starting off with one box in this particular area, and we might have many other opportunities that might come on our platform. So so the like I said, the asset is located on Old Madras Road along Hoskote and Ashapur belt, and it's quite a hot belt in this particular vicinity, and well connected to all the major cities, to like your Tirupur, to Chennai, to Andhra, and other cities. So the warehouse, the location where the warehouse is located is quite well connected to the Old Madras Road, which is less than about a kilometer, which again connects it to the Bangalore main city. And most importantly, the upcoming Bangalore Express Highway is about 20 kilometers away. And like I said, Bangalore International Airport is about 48 kilometers away. And this area, you see a lot of other warehousing factories which are set up, which is Wistron, Scania, and you've got Honda. You have Volvo's factory, which is there. Bank opposite to this property is Flipkart's warehousing facility. So from a connectivity point of view, it's right in middle of the airport. If say a shipment were to come, it's a good midpoint. So talking about the tenant is one of the largest the logistics company, where the parent company is a listed company on the BSE, and has got the $8 billion market capitalization in India. They have got a lot of international clients, and they are present across Africa, Middle East, and other parts of other parts of the world. So they have got warehousing presence of more than 265 165 warehouses, and they've got about 290 plus international clients. So yeah, so that's that about the tenant.
Right. Thanks, Prajvan. On the key lease terms, right? The lease commences on in April 20 of 2023. But while the tenant will actually start paying the rentals from April, the rental payouts to the investor will actually begin in January itself of the coming year. And these will be funded by the builder, who is Avigna. The rent per square feet is 19.7 rupees per month per square foot. The rent escalation will this will follow a standard escalation where there will be 15% escalation in the fourth year. Post that, there'll be a 5% escalation every month, every year. So on the security deposit, there is an approximately 6 months equivalent security deposit available with the SPV. The total lease period is 15 years, and out of that, there's a 7 year lock-in period. Of course, the insurance and property tax, as is the case with all strata opportunities, will be borne by the investors. This has already been taken care of in the cash flows. I will pause here and hand it over to my colleague Ravin to take the our users over the returns.
Thanks, Aman, for explaining the key lease terms. So moving to the returns, first I would like to clarify to our viewers that the returns mentioned on this slide are basically for investors who are investing via GRIP. If you invest directly via SaaS platform, the returns are slightly different, and this is something that we just want our viewers to keep in mind. Now, talking about the target IRR of this opportunity, it's 11.8% pre-tax IRR, and the target profit multiple is 1.64x. If you look at the note below, you'll note that these numbers are based on an annual appreciation 6%, and the whole period assumed is 5 years, right? This is the base case that our partner Strata also, highlighted on their website, and that's the same base case that we are taking. So while the lease period with the tenant is 15 years, the base case that we are using is 5 years as the whole period, right? Moving on to the average pre-tax yield, it's 8.68%. The entry yield, which is the year one pre-tax yield for the investor, is 9.07%. Again, the average pre-tax yield is assuming the whole period of 5 years. So yeah, that's about the returns, and Aman, I would like to pass it back to you to take it ahead.
So on the investment structure, at the start of this webinar, I had mentioned that the opportunity is being made available to you through a SEBI regulated structure. GRIP, as a technology partner, has partnered with a SEBI registered pooling vehicle, which is set up in form of an alternative investment fund. Our users actually become direct contributors to this alternative investment fund and are allotted units of the fund itself. The AIF pools the money collected from the users and invests it to purchase the securities of the SPV. This is the structure that is followed by Strata for distributing returns to all of its investors. Strata typically has a SPV setup which holds the asset. In this case, the asset is, of course, the opportunity that Prajvan spoke about. The SPV in turn issues a combination of CCD and equity shares to provide both a monthly coupon as well as the upside which may come from the equity shares. Moving ahead, since the entire structure and the entire investment has been made available to you through a SEBI regulated structure, there are certain SEBI norms which have to be complied with, and we urge all investors to please keep the qualification criteria in mind. For individuals, the qualification criteria is that you must have net tangible assets of more than INR 2 crores. This is, by the way, excluding the value of your principal residence. And additionally, you are required to have certain experience requirements which you are supposed to meet. For body corporates, the criteria is actually a net worth based criteria, which requires your net worth to be more than INR 10 crores. It is worthwhile to mention that by virtue of entering or investing in this opportunity, you would also be required to sign up to the AIF documentation, which, as per SEBI norms, requires you to invest INR 25 lakhs over a period of 5 years in various schemes. This 25 lakh limit is fungible to both towards both our startup equity product as well as more real estate opportunities that we will bring in future. We would like to take a pause here and would like to bring this webinar to a close. In terms of, we thank everyone for attending the webinar. We would just like to take the next few minutes to address a few questions that we have come to, that we have most commonly seen. I can start with posing some of these questions to Prajvan. Um, so Prajvan, our first question is, uh, how can we compare this investment to a REIT?
Yeah. REIT and the fractional investments are slightly different. Although they invest in the similar asset classes. A REIT can invest in CRE, residential, hospitality. So it's a pool of fund. So REIT is a fund, right? So that has a pool of assets which can be residential, which can be commercial, which can be the hotels. So we at Strata, which is a fractional investment platform, we only concentrate on the CRE, that is commercial real estate investment, and we are specific to office spaces, warehousing, industrial opportunities, and all of that. We generally, at this point in time, do not want to enter into hotels because of the volatility which is there and uncertainty which is there in terms of occupancy. Whereas a REIT can invest into a hotel, wherein a client does not have a control on if he wants to opt out from investing into that specific portfolio. So it's like investing in a fund. So here with Strata, we can choose if we are investing, say, in an office space, and if an investor is already overexposed to office spaces, he can choose not to invest. One. So here it is asset specific. Second, with a platform like Strata, here the payouts, 100% of the payout goes to the investors month on month, whereas in a REIT, only about 80% goes. The balance 20% is clawed back and it is reinvested. That's that. Third thing is, in a REIT, there's a lot of volatility which is there because of the stock market volatility which is there. So there's a lot of volatility which an investor witnesses, whereas in a platform like Strata, this is more stable. So here an investor exactly knows what rentals are coming month on month. Everything is contractual in nature. An investor knows who is the tenant, who is what is the rentals that is coming from the tenant, what are the charges that Strata makes. So everything is quite visible. Whereas an investor, when he's investing in a REIT, in the beginning, he does not have a clear idea as to what is the portfolio, in which assets he is investing in. So yeah, so those are some of the common differences which is there between. Another thing that I want to add is, in terms of liquidity, I would say REITs are slightly more liquid because you are able to sell, and it's on the exchange, right? So you are able to buy and sell it more quickly than a fractional investment platform, which would take maybe a week or sometimes 2 to 3 weeks. To quote some of our track record, we have had investors who wanted to exit individually, and the maximum time that we took was about 3.5 weeks. Which in a real estate segment, that kind of liquidity is very good with that kind of time frame. But having said that, if you have to compare it to REIT has got a better liquidity, but of course that comes up with a lot of volatility and risk.
Thank you for that, Prajvan. Just moving on, I think one of the other questions that we have is, uh, and which is one of the questions that we are typically asked, is what is the minimum appreciation percentage that we can talk of per year by investing in this opportunity?
So generally what happens is at Strata, we are very conservative in projecting the appreciation apart from the rentals, which is of course quite visible and quite evident that when you see it on the contract and on the financial model. But on the appreciation side, We are on a conservative side. We look at an appreciation in this particular pocket of Bangalore, which is Hoskote. We're looking at the conservatively 6%, but it could go up to about anything between 6 to say 7.5. But we are keeping right now at 6% because of the kind of appreciation that with the kind of growth that we're seeing. Because see, in Hosur, I mean, again, in commercial real estate, your appreciation is linked or to the cap rate, which is the rentals. So in Hosur, the rentals that we started was today the same property with a different tenant. The rentals that we are getting is about 20 rupees per square feet. So the same is with Hoskote today. So yeah, so that's that. So we are looking at a on a conservative level an appreciation of 6% in this year on year.
Sure. Thanks for that, Prajvan. One other question that is typically asked is about the safety around, strata managing the property, or or on the SPV. So if you could just please answer that as well.
Yeah, so today the another beauty of we following the SPV structure, which is a structure today. Even SEBI recommends, or SEBI and RERA also recommend investors. So post RERA coming into picture, RERA came up with this idea that any builder today, whether it be residential, commercial, they need to form an SPV, and all the money has to go to an SPV. What happens is the money that goes to the SPV has to go to a specific project. Whereas earlier, what builders used to do was they used to cut a check in their name and they used to divert funds. They used to, instead of taking the money for project A, they used to divert it to, give some to the project A, and then they used to divert it to project B and things like that. So there's a whole lot of delay that happens. So that's why the SPV concept came into picture by RERA, which is what we are also following. So today, with the SPV being in place, it's a pass-through entity. So it's the SPV's entire objective is to acquire and manage that specific asset. So they have escrow accounts in place. We have trustees that are there on board. We have individual directors on board to ensure that there's a smooth flow of funds that happen. So today, one of the questions that commonly investors ask is, what if Strata tomorrow shut shop and they were to move out, right? What would happen to the investment? So their investments would be their rentals, and all their investment will independently operate irrespective of Strata being there, because today we are not taking the money. So the investors are investing in this asset through the SPV. So they are 100% shareholders of the SPV. Strata does not have any ownership on the SPV. We are property managers for which we charge a management fee. So even if Strata were to move out of the entire equation, what would happen is, like say today, the investors have the right today, if they think that today Strata is not doing a good job in terms of asset management, they, with 55% consensus, they can take Strata out of proportion, and with an AGM, wherein independent directors would be a part of that AGM, and we would be replaced by any of the IPCs like your JLL or a CBRA, and they would do asset management related work. So that's the beauty of having an SPV, because every asset that we bring on the platform will have a separate SPV, which is private limited in nature, and which will have a separate escrow account, and which will have independent directors and trustees.
Thanks, Prajwan. I think that should also help answer, any concerns that the investors might have. One other question that comes to my mind is on the on given the fact that this opportunity is currently under development, right? So when can this opportunity can our investors expect the opportunity to be fully developed?
So here, the construction has already started in this particular asset. Like I said, your warehousing generally does not take a very long time. It takes about 4 to 5 months. So here we are expecting the delivery to happen by January end, and the tenants would occupy the property by April, because they need fit outs and all of that for 2.5 months. So by April, tenants would occupy the property. Yeah, so that's it. And today with this builder, that is Avigna, we have already done assets in the past. The entire Hosur facility was done by Avigna, and we had multiple tenants who had occupied the property, and it's completely up and running, and the tenants have occupied, and it's completely done within about 8 to 9 months time. Yeah, but that I'm talking about is for a larger space, like a 3.5, 4 lakh square feet. And there was a tenant who took about 7 lakh square feet. So those are 2 lakh square feet. And here the another advantage here is the leveling is already there. The entire land is completely leveled already. So hence there's no much of time which is required. So yeah.
Sure.
But irrespective of the construction, the rentals for our investors would start.
Yes, yes, thank you for that. Thank you for highlighting that. And that is definitely an important point to note. Uh, I think that is all the questions that we had for today's session. I would like to thank everyone for attending this recorded webinar and for reviewing this opportunity. Please feel free to reach out to either your relationship manager at GRIP or on our email addresses in case you have any further questions on this opportunity. We will be more than happy to connect and source the answers to all of your queries through the Strata team. So once again, thank you everyone for attending this webinar.
Thank you so much,
Yeah,
Aman.
and
Thank you, Pravin.